Good morning, traders. It's Thursday, December the 12th. Taking a look at the charts, we got the SP 500. You can see here the market. Let's just move over here. We saw the market try and push up early this morning in pre-market and overnight trading. And more or less came up, tested the highs from 4 days ago, and starting to move down this morning with a little bit of selling volume stepping in. More or less, I feel like this week is kind of the do or die week. We need to see this extend and start to break to new highs on the SP 500, or it's going to start to roll over and pick up speed to the downside for a complex correction, seeing a more of an A, B, C wave, something that'll break the lows that we saw back here on December 3rd. And that would start to create some type of washout low, much larger spike in the VIX, and this should spark a rally if that unfolds in the safe havens like bonds and precious metals, miners, things like that. So that's kind of where we are in the grand scheme of things. If we just zoom into the pre-market trading this morning, so the market closed over here yesterday in overnight trading. It chopped around. Looks like there might have been some news, a quick pop sell-off, kind of has been working its way higher. And this morning, sorry, this is yesterday's trading action. Let me just go back here. This is yesterday's trading action. In the morning, we rallied up, ended up having a strong close after the Fed. And in overnight trading, we've continued to drift higher. And this morning, now that we're starting to see some selling volume step in, all the selling or the volume spikes are selling pressure, and we're seeing it pick up speed to the downside. We'll see if the market can save itself and break to new highs, or is it going to start to roll over and start to sell off. Now, if we take a look over here at the US dollar index, you can see yesterday's big red bar. The dollar gapped down, sold off huge throughout the day, and that's really what's really sparked the strong rally in gold, silver, and miners yesterday. Overall, the dollar is getting down into this three-wave correction that we talked about quite a while ago, where the market likes to do an A, B, C wave correction, and when you break a previous low, it's this break of this low that we saw yesterday that starts to cleanse the market. And we've seen this happen over and over again, where the market comes down, has a correction, and then goes into a panic sell-off. This A, B, C correction cleanses the market for another move. And then we saw more or less a fairly significant move to the upside to new highs. And then we got another A, B, C correction. This one we watched unfold. We had the Fibonacci measured moves, hit it to the more or less the cent, and then we saw the market start the next move up, came to new all-time highs again, or our multi-year highs. And now we've got this A, B, C correction taking place. We'll see if the dollar finds a bottom down here. If it does and starts to rally again, that could keep a little bit of a lid on the precious metals. But overall, we have seen the dollar move higher overall this year. We've seen metals and miners move higher as well. And we could continue to see, even if the dollar does rally, we could see metals hold up or perform very well still going forward. But if the US dollar does continue to break down and really starts to break a significant pivot low and really starts to break down on a technical basis, then that's when we're going to see the huge breakout in precious metals and see that really take off in terms of the US dollar currency. Now, jumping over to, let's get back to, let's go to bonds, take a look at the bonds here. More or less, bonds this morning, we're trading down a little bit. Overall, the SP 500 just starting to pick up some speed to the downside, selling, and money starting to rally into bonds. You can see here the last 45 minutes, we've seen bonds really start to pick up speed on some volume. So there is some fear creeping into the market. Money's going into protective phase. Looking over the other safe havens, here is gold. Gold up 0.75% this morning, so it's testing these recent highs. As you know, it is still stair-stepping its way lower with this series of kind of sell-offs and then kind of a bear flag and hook. Had a sell-off, bear flag, sell-off. It's still in this bear flag. It is. This will be a fairly significant line in the sand. It's a little ways away from where we are now, but overall we're still stair-stepping our way down. We had a line in the sand here, another line here. This is the next one from the next level down. So we'll see how gold starts to perform. We are starting to see it come up, and it's broke this high. It broke another internal high. Usually we want to see it break a higher high, one of these two. and then we want to see it break one over here, one previous to this current correction. That's when you get a real full kind of momentum shift from the downside to the upside, and that's kind of the key point for a real full-fledged breakout. But if we take a look over at the miners, miners strong day yesterday, obviously on the back of a falling dollar. It has started to rotate to the upside. We've gone from these lower lows to now we've got higher lows. And the question is this going to consolidate through here or pull back a bit more, or is this going to start to break out? You can see here we've broken an internal high and we broke an external high, a previous standout significant high. So we're testing these levels today. The market's set to gap open. Looks like money is flowing into the safe havens, and gold miners tend to lead physical gold. So gold miners would break first. We see gold usually follow suit a few days after. Sometimes it's actually a week or two after in terms of reversals. But overall, miners are starting to outperform, and they're going to have another move up today. We'll see if today can hold. Overall, we're into one of these levels here where the market has excitement and everyone's piling into it. And you can usually, when everyone's piling into it, that's when you get these big sell-offs. It's a head fake. But you can see here the momentum has shifted from the down biased to now more or less an up bias. So there's a little bit different of a bias this time, more of a bullish and an upward trend with the market pushing higher and the falling dollar. So overall, metals look like they're turning a corner, and so are miners. Looking over at natural gas, up 1.9% this morning. Again, it's been in this big corrective phase. It's trying to form some type of bottom here. We're going to let it do its thing. This could still be a pretty volatile bottom. Maybe we come back down for a double bottom or something else over here, but we're going to let it continue to mature. We're going to be looking to get long natural gas when the time comes. We played this move here, we played this move here, and then we played this downward move here as well. And so we're going to be looking for a new setup eventually for a potential move to some new highs again going forward towards this $3 mark. Looking over at crude, up 0.3%, continues to hold up in this bull flag. It rallied up. It's been trading sideways the last 3 or 4 sessions, kind of holding its ground. It is stuck under this at this $59.60 level, which is fairly significant resistance. Overall, we're going to let it continue to do its thing. It's grinding the upper end of this channel, which at this point it keeps the lid on things, and we might see it pop up and push higher towards this 60 over the next little while. But overall, more or less, it has more downside potential at this point in terms of it having some type of correction back down. If it starts to break down from this pattern, it could be fairly significant. And if we do see some type of topping pattern start to form up here, we may actually look to get in place for a quick move to the lower end of the range and then potentially hold for a breakdown for a significant drop from there. Taking a quick look at two sectors that also tend to lead the market. We talked about this actually about a week and a half ago. We posted an article about it, but more or less, this is the transportation sector. It's forming a head and shoulders formation. We've got this rising neckline. We were talking about it right over here, I think, that it looks like the market is on the verge of the transport starting to break down. You can see they gap lower, sold off, so they broke down through this neckline, and now they've been forming this correction here, this bounce, this little potential bull flag. Maybe it's going to push a little bit higher, but overall the momentum here has shifted to the downside, and we are expecting this to continue to move lower. And if this leads the market, typically if transports sell off first, we're going to see the equities market, the SP 500, start to sell off as well. We had a similar type of pattern over here. It formed a head and shoulders, had a neckline, broke down, had the bounce, and then continued to follow through. And that's the similar type of setup that's unfolding here. Now the other is the industrial sector. We were talking about this as well in the past, that it's forming this. It was forming this somewhat broadening formation in price, showing increased volatility, and how is more or less pretty lofty. It's had a significant run. It has broken down. It's bounced back up. It's testing resistance, this breakout zone, and we could start to see this move lower as well. And these are typically leading the market, the SP 500, saying there's some weakness going on in transportation, meaning maybe sales are down, all those things, less production, industrial, and that we could see a bit of a correction. So overall, The equities market is at this turning point. The SP 500 is if it can extend and break out and run to a new high, or is it going to actually start to roll over here and start to collapse, and we're going to see this small cap, the gold miners more or less, start to break out to a new rally. Anyways, that's it for now. Talk to you in a little bit. Bye-bye.